Tax season, two words that can cause a wave of anxiety for even the most organized individuals. The complexity of tax laws, the fear of making costly mistakes, and the time-consuming process of gathering documents can make the mere thought of filing taxes overwhelming. But what if tax filing didn't have to be so daunting? What if you could navigate tax season with confidence, knowing you're maximizing your deductions, avoiding errors, and staying on the right side of the IRS? Welcome to Tax Filing Made Easy, where we break down the process into manageable steps, empowering you to tackle your taxes with ease. 1. Whether you're a first-time filer or a seasoned taxpayer, this guide is designed to help you streamline your tax preparation, ensuring you file accurately and efficiently. 2. Let's dive into the essentials that will make your tax filing experience as painless as possible. 3. 1. Get organized. Gather your documents early. 4. One of the biggest stressor during tax season is scrambling to find the necessary documents at the last minute. The key to a smooth tax filing process is preparation. Start by creating a checklist of all the documents you'll need. This typically includes 1. W-2 forms. If you're an employee, your employer will provide you with a W-2 form, detailing your income and the taxes withheld during the year. 2. 1099 forms. If you're self-employed, an independent contractor, or have other sources of income, such as interest, dividends, or rental income, you'll receive various 1099 forms. 3. Receipts for deductions. Gather receipts for deductible expenses, such as charitable contributions, medical expenses, mortgage interest, and business-related costs. 4. Last year's tax return. Having your previous year's tax return handy can help you avoid missing any carryover items, such as capital losses or charitable contributions. 5. Creating a dedicated folder, either physical or digital, to store these documents as they arrive will save you from the chaos of searching for them when it's time to file. 2. Understand your filing status. Your filing status significantly impacts your tax bracket, standard deduction, and eligibility for certain credits. The 5 filing statuses are: 1. Single, unmarried or legally separated individuals who do not qualify for any other status. 2. Married. Filing jointly, married couples can file a joint return, combining their income and deductions. 3. Married. Filing separately, married individuals can choose to file separately, though this often results in a higher tax liability. Head of household, unmarried individuals who provide more than half the cost of keeping up a home for a qualifying person. Qualifying widow, with dependent child. This status is available for 2 years following the year of a spouse's death if you have a dependent child. Choosing the correct filing status can significantly impact your tax liability, so it's crucial to understand which one applies to you. 3. Maximize deductions and credits. Tax deductions and credits can substantially reduce your tax liability, so it's essential to understand which ones you're eligible for. Standard deduction versus itemizing. The standard deduction is a set amount that reduces your taxable income. For 2023, the standard deduction is $13,850 for single filers and $27,700 for married couples filing jointly. If your deductible expenses exceed the standard deduction, itemizing may be beneficial. Common deductions. Some of the most common deductions include mortgage interest, property taxes, state and local taxes, charitable contributions, and medical expenses that exceed 7.5% of your adjusted gross income, AGI. Tax credits. Credits directly reduce your tax bill. 1. Popular credits include the Earned Income Tax Credit, EITC, Child Tax Credit, and education credits like the American Opportunity Tax Credit and the Lifetime Learning Credit. 2. To maximize your deductions and credits, keep detailed records and consult with a tax professional if you're unsure which ones apply to you. 3. 4. Consider tax-advantaged accounts. 4. Tax-advantaged accounts, such as IRAs, 401ks, and health savings accounts, HSAs, offer significant tax benefits. Contributions to traditional IRAs and 401ks are tax-deductible, reducing your taxable income for the year. HSAs allow you to save pre-tax dollars for medical expenses, and if you have a high-deductible health plan, this can be a great way to lower your tax bill. Additionally, consider the benefits of a Roth IRA, where contributions are made with after-tax dollars, but withdrawals in retirement are tax-free. Understanding how to leverage these accounts can help you save on taxes now and in the future. 5. Utilize tax software or hire a professional. In today's digital age, tax software has made filing taxes more accessible than ever. Programs like TurboTax, H&R Block, and TaxAct guide you through the process with step-by-step instructions, ensuring you don't miss any deductions or credits. These tools are especially useful if your tax situation is relatively straightforward. However, if you have a more complex tax situation, such as owning a business, having multiple income streams, or dealing with significant investments, hiring a tax professional may be the best route. A certified public accountant, CPA, or enrolled agent, EA, can provide personalized advice, ensure you're compliant with all tax laws, and potentially save you money in the long run. 6. Double-check your work before hitting the submit button or mailing your tax return. It's crucial to review your work. Common mistakes include incorrect Social Security numbers. Ensure all Social Security numbers on your tax return are correct. Math errors. Tax software reduces the likelihood of math errors, but if you're filing by hand, double-check all calculations. Missing signatures. If you're filing a paper return, don't forget to sign it. An unsigned return is considered invalid. Bank account information. If you're expecting a refund and choose direct deposit, verify that your bank account information is accurate to avoid delays. Taking the time to review your tax return can prevent costly errors and the hassle of having to file an amended return later. 7. File early to avoid penalties. Procrastination is a common enemy during tax season, but filing early has several advantages. Not only does it give you more time to address any issues that may arise, but it also reduces the risk of identity theft. Scammers who obtain your personal information can file a fraudulent tax return in your name, claiming your refund. By filing early, you can beat him to it. Additionally, if you owe taxes, filing early gives you more time to save up or arrange a payment plan. The IRS offers payment options, such as installment agreements, to help you manage your tax bill without incurring hefty penalties. 8. Understand extensions and payment options. Life happens, and sometimes you need more time to file your tax return. If you can't meet the April 15th deadline, you can request an extension, giving you until October 15th to file. However, it's important to note that an extension to file is not an extension to pay. You're still required to estimate and pay any taxes owed by the original deadline to avoid penalties and interest. If you find yourself unable to pay your tax bill in full, don't panic. The IRS offers several payment options, including installment agreements, short-term payment plans, and offers in compromise. It's better to set up a payment plan than to ignore your tax debt, as penalties and interest will continue to accrue. 9. Stay informed about tax law changes. Tax laws are constantly evolving, and staying informed about changes is crucial to ensure you're filing correctly. For example, the Tax Cuts and Jobs Act of 2017 brought significant changes to deductions, exemptions, and tax brackets that continue to impact taxpayers. Each year, make it a point to review any tax law updates that may affect your filing. This is especially important if you're self-employed, own a business, or have significant investments, as changes to the tax code can have a substantial impact on your tax liability. 10. Keep your records organized for the future. Once you've filed your tax return, don't just toss your documents in a drawer and forget about them. Keep your tax records organized and accessible, as the IRS recommends retaining copies of your tax returns and supporting documents for at least 3 years. If you claim a loss from worthless securities or bad debt deduction, keep those records for 7 years. Having your records organized can make future tax filings easier, help you track your financial progress, and provide the necessary documentation in the event of an audit. Conclusion: taking control of your tax season filing taxes doesn't have to be a source of stress and confusion. By staying organized, understanding your options, and taking advantage of resources like tax software or professional help, you can simplify the process and even find ways to save money. Remember, tax season is an opportunity to take control of your finances, ensuring you're on the path to financial stability and success. With the right approach, you can transform tax filing from a dreaded task into a straightforward process that leaves you feeling confident and in control. So, as tax season approaches, take a deep breath, gather your documents, and approach your taxes with the knowledge and tools you need to succeed. Tax Filing Made Easy is not just a title. It's a promise that with a little effort and preparation, you can make this tax season your easiest one yet.